Right, fam. Welcome to Electron FX, and this is the birthday special video. Right, I did a poll on my Telegram channel, and it was supposed to be a video based on request. Right, so this video is for my birthday, a gift to you all. So I did a poll and I listed some topics, and I asked what topic would you like to get for the birthday request video. And based on the poll, demand and supply was the topic picked by the majority. So that will be the topic I'll be handling today: demand and supply in Forex, right? If you are watching this video for the first time, I would just like you to just take a minute to go to the description of the video and join the Telegram channel. Just join the Telegram channel in the description aspect of the video. Just go to the description and join the Telegram channel to get more updates. That's where we there were communities hosted, right? So join the Telegram channel, right? And subscribe to the channel, to this YouTube channel as well. So you join the Telegram channel and subscribe, right? Subscribe to this YouTube channel, right? So let's go straight to the video. What is demand and supply as related to Forex? What is demand and supply as related to Forex? Now, for those people that don't like economics, sorry, I have to drag you into economics, because for you to fully understand this particular topic, you have to bring in the economic term, right? So the first thing we want to know, we have to go to our Google and type what is demand in economics, right? They say demand is an economic principle referring to a consumer's desire to purchase goods and services and willingness to pay a price for a specific good or service. So the most interesting word in this whole definition is here, purchase, right? When we say purchase, we mean buy, right? So we can simply define a demand zone in Forex as a price at which buyers are willing to put their money at stake, right? So you can define a demand zone simply as buyer's zone, or let's say buyer's price. Yeah, buyer's price. That is the simple definition of demand zone. Buyer's price. This price which buyers will want to buy the market, right? It's the zone in which we have more buyers and sellers, right? For instance, look at this chart. This is a chart, right? And if you look closely at this point, right? If you look closely at this point, we can see that the market was trending downwards, and then it came to this point. And look at what happened. Market bought from here and bought for this. So this zone here cannot be likened to a demand zone, because this is where buyers were willing to buy this market and buy it all the way. And if you extend it to the future, you can see what happened. That price came into this zone again, tapped it and bought for about, let's say, 6 to 8 days, right? So buyers demand zones are those zones are defined as buyer's price, right? The price in which buyers will want to stake their money, right? And then what is supply? Supply zone is simply the opposite of demand zones. The supply zone is simply a seller's price. But let's look at the economic definition. What is supply in economics, right? What is supply in economics? See, look at the definition here. It says it describes the total amount of specific goods or services available to customers, right? Okay, look at this definition here. It says in economics, supply is the amount of resources that firms, producers, and so on are willing and able to provide. The keyword there is provide, meaning they are able to give out for sale, right? That is what supply means. To provide means that I am selling it, right? The owner of the product is selling it. So we can simply define, say, the supply zone as seller's price. Yeah, we can simply define it as seller's price. A supply zone is seller's price, the price in which sellers will feel okay to sell or release their goods, right? So in Forex or trading is simply defined as seller's price. In other words, it is a supply zone, not demand zone, right? Sorry. A supply zone is simply defined as seller's price, right? That is simple definition, seller's price. And when I mean price, I don't mean one particular price, right? It's not one particular price. It could be a range, right? It's not just one particular price, like maybe 5,000, 6,000 now. It's a zone, right? Or let's add something to make it more suitable, right? Let's say price range, right? So it will be more, it's cover a more amount of, right? It's buyer's price range. That means demand zone is simply buyer's price range. That means buyers willing to buy maybe from 72,000 to 80,000. That is that range where buyers willing to buy the market. Maybe if an iPhone is sold for $500 and it drops to maybe 200 to 100, the buyers will feel more comfortable to buy it at that zone, right? And supply zone, no sellers will want to sell at a high price. So now, one thing you should know about supply and demand zone is that supply zones can be seen as resistance, right? They can be seen as resistance. Right? So people, you can call a supply zone a resistance, and you can call a demand zone a support, right? Because they basically do the same thing. If the market is trending downwards and it comes to a demand zone, it's going to bounce up, right? So this zone here is a demand zone and it's also a support. But since the topic is not support and resistance, we are focusing on demand and supply. So this is a demand zone, right? Those zones in which you see a sharp rejection and it's very heavy push in the market. Look at this, you see this market was trending downwards, taps here, and then this is a demand zone because you can see this heavy push after the market tapped here, right? So you can actually tell a demand and supply zone by looking at how much momentum or how much money was put into the market at that price, right? That means at that price, buyers were willing to put a lot of money in the market. You know that the market is it moves based on what we call liquidity, and liquidity is simply money. That means for this market to move from here to here, people must be willing to buy, and what happens is that their money push the market up. So a demand zone is that zone or that price range in which the market buyers are willing to buy, they're willing to put their money at stake. That is simply what a demand zone is, right? So a supply zone is simply the opposite of this. It's simply the opposite of this, right? It's simply the opposite of this, right? So if you want to just have a supply zone, right? This is a supply zone now. The supply zone, right? So we label this supply zone, right? And then the market was doing something like this. Actually, the market was kind of going bullish, and then it taps here, and then we see this heavy drop, right? You can see that the market, let me see if I can use a ghost feed, but it's still basically the same thing though. Let me see if it's going to work, the ghost feed. Okay. All right, it's working. Saw this, and then saw this, right? So since I've done this, okay, let's just use that. Let me remove this. Okay. Now undo. Sorry. Right. Okay. Let me remove this. So we have the supply zone, the market do this, okay. This is a ghost feed, tap here, and then we saw this heavy sell, right? So you can simply call that our demand zone. You can call this our supply zone, sorry. right? It's a zone in which sellers are willing to push price, they're willing to push their money, they're willing to sell, right? It's just simply the zone where you see that heavy sell momentum, right? So now what is the relevance of this to our trading? The number one thing that we should know, I want to just make sure some things that you should know about supply and demand zones, right? Number one thing you should know about supply and demand zones to help your trading, right? Number one, always, right, trade demand and supply in line with the trend. That's the first thing you should always do. Always have this in mind. Always trade demand and supply in line with the trend, right? The market should not be in a bearish trend and you're trying to buy at a demand zone, or the market should not be in a bullish trend and you're trying to sell at a supply zone. Now, you're going to get stopped out. So remember that for the buyers to buy the market, they believe the market is going to go up. So what gives you the idea that a bullish market, people be willing to sell with stake their money in the trade when it's actually a bullish market? Or what makes you believe that a bearish market, people be willing to buy with big money? No, the goal of trading is to make money. So you should always trade demand and supply in line with the trend. You shouldn't be going counter trend. The market should not be trending downwards, maybe doing stuff like this, and you're trying to now buy. You're not trying to now buy it. Now you should be looking to sell this. So when the market does this, the market has formed what? A supply zone. It has formed a supply zone. This is a lower high now. That's formed a supply zone. The market does this again. That's formed a supply zone. Another supply zone. So most often the market will do something like this. You see the market do something like this. Come on, tap into the supply zone and then sell down again. So these are the opportunities we're looking for. You should be looking to sell in a supply zone in line with the trend, right? So you expect the market to, if the market should come and maybe tap into that supply zone, remember it's not a particular number, right? It could be this whole zone here, and the market just comes and taps into that. You should usually be taking yourself. You shouldn't be looking to buy here at this zone. Now, I want to point out there is that number two thing you should know about supply and demand zones is that we have what we call the weak supply and the weak demand zones, right? So we have weak and strong zones. We have the weak and strong zones, right? We have the weak and the strong zones. We have the weak demand zones and the strong demand zones. And how can we differentiate them? The weak demand zones are those ones that took price a long time before there was a turn, right? So for instance, we had some kind of supply zone here, and look what the market did. Let me just add my polyline. So the market, instead of the market, they just said that the market came and did something like this, came and did this, came and did this. The market kept doing this for hours, It finally sold down, right? So seeing this, you saw this long range at this point. This gave you an idea that this is a weak supply zone. So in future, you shouldn't be looking to sell here, right? You should be looking, expecting to break, because the more time a support or resistance or demand and supply zone is tested, is how likely to break, right? You saw this. This was a weak supply zone, because we saw the market. It took a long time, right? We saw this long struggle, meaning that the sellers did not have the money to push price down at once. It took them a long while before the market could actually rally down. So this zone becomes a weak supply zone. So in future, so the market does do this, it will just start a bit and then break above, right? So it's likely going to happen in the future. And so the market will do this and break above, right? We're going to use live examples to see this stuff. So look at this. The market is going to likely just do this and break, because this is a weak supply zone. Always look out for those zones that rejected price with one touch, two touch, few moments. You shouldn't be looking to take your trades and supply demand zones when you saw a long accumulation, a long rejection. You saw how many weeks, 5, 6, 7 weeks, you saw engulfing count, the market came back. And no, those are weak supply zones. Those are weak supply zones. I should not be looking to take your trades at those kind of zones. So we call them a weak supply. This is a weak supply zone because of we saw how the market struggled and struggled before it finally slowed it down, right? That means the buyers were not willing to give up at this point. They kept trying and trying and trying, but finally they gave way, and it's a weak supply zone. So these are how we should. This second thing you should know, that we have weak and strong supply and demand zones, right? So now, having known this, we have also weak and strong demand zones, right? You're looking out for those zones that sent price once, like this one we saw, markets came down, just one tap. It did not reject or consolidate or waste time around there, or do false breaks and all of that. We saw this one touch, and so this becomes what a strong demand zone, right? So these are the two basic things you should know about demand and supply zones. You should always trade it in line with the trend. If it's a bullish market, be looking to sell with your demand and supply zones. And now the next thing that you should know, right? The next thing you should know about this is that it should not be traded isolations, right? So demand and supply should not be traded in isolation, right? You should not trade demand and supply in isolation. That means you must have your Fibonacci confluence, you must have your trend line confluence, you should have your trend confluence, you should have your resistance and support confluence, you should have your harmonics or whatever you trade, your patterns, head and shoulder, double top, all those stuff. You should always be in confluence. So you should not trade demand and supply alone. Maybe surprise selling from me, just want to sell. No, we are going to get stopped out, right? So that is another thing you should know. And the final thing you should know is that it is not foolproof. It's not foolproof, meaning that demand and supply zones are not foolproof. Because this means that there are times they get violated, right? The market may just come to supply zone and break through, and as long as the money for the buy is more than the sell. I mean, this is the supply zone, and market comes here, right? Even though the market is coming to the supply zone, market rally up here. If the buyers have more money in this trade than the sellers, it's going to break through, right? So you should always know that these are not foolproof. That means you shouldn't over leverage your account on any reason because you are seeing the supply zone. No, you shouldn't over leverage your account. Now, let us add this to market structure. Let's add this to market structure. Now, one simple way to add supply and demand zone to market structure is to let's assume the market is rallying up. You see the market rallying up, right? See the market rallying up. The most probable supply demand zones are those ones that broke structure, right? For instance, we saw the market give us a demand zone right here at this point here. So the market gave us a demand zone here and then broke structure to the upside. So we can call this our BOS at this point here. And my text tool is just a very simple way to trade. Okay. How about BOS at this point? Yeah. So add our BOS here. And then we saw this demand zone here. So let's label that as well. Just how to add it, right? Just how to add it. So we have our demand zone at this point here. And then the market did this. So this was the demand zone that broke through the upside. That means the buy orders here were enough to break this zone here. That means if the market comes here in the future, remember that this is a bullish trend. So the market should eventually come into this area, right? This is a good zone to buy from. You buy and take it higher, right? So this is just a very simple way I trade, right? I look out for those demand zones that broke structure. Like the market came, gave this demand zone and then broke through to the upside. If market comes here in the future, as long as the trend is not compromised, the market is still a bullish trend and this has not broken for itself, you can simply take your buy when the market comes into that zone again, because since the market was able to break this structure most likely it's going to break this one too, because markets make higher highs and higher lows in a bullish market, right? So you should always trade demand zone in line with the trend, and the most probable ones are those ones that broke structure to the upside or to the downside, right? So let us try to replicate this for a sell scenario. These are the most probable ones you should trade. Very easy way to trade. So the market should come into that demand zone. You can simply take your buy here. You can simply take your buy here in the demand zone. Your stop loss a bit below that demand zone. Yeah. And where should be your target? It should be where the new high. Targeting the new high for TP, because the market may not be able to break it. So now the market has broken here, meaning that all the people trying to sell would have been stopped out. So your target should be here. Should be looking at the new high which was formed. So the market came into that demand zone which broke it to the upside, right? To mitigate it or whatever, you take your buy in that demand zone and you're targeting where the next high. So this is just a very simple way to trade. Look out for those demand or supply zones which broke structure to the upside or to the downside, and then you take your buy. Very simple. Also add with other confluences like your Fibonacci levels and all of that, right? Your Fibonacci levels, your resistance and support, your moving averages, if you trade them, right? So this is a very simple way to trade. Look out for a demand structure that broke the demand or supply zone that broke structure to the upside or to the downside, and take your zones there. So I wouldn't be doing for a sell, because the sell is just the inverse of this, right? You should know what that means. That means if you're having a bearish market, the market doing this, selling down, selling down, selling down, and then we had this BOS at this point here. So we saw a break of structure. The market broke this zone here, right? So you should be looking at taking a sell around there if the market eventually comes there. So if the market comes there, it is now a probable trade, because it could simply have this and then rally down. So this is just a very simple way to do demand and supply. Look out for the ones that broke structure, and then you take your trade from them, right? So that is one way to trade it, right, in line with the trend. Another way to trade it is when there is a shift of trend. So this is in line with the trend, and also you can trade this when there's a shift of trend, right? So let's assume the market was bullish, bullish, and then we saw a break of structure to the downside, right? So now we have seen a break to the downside in this scenario, right? So our BOS market closed below the last higher low at this point. So this becomes our BOS right here, our BOS. So our BOS, this is our BOS, break of structure at this point here. So this was the supply zone that this here becomes what is supply zone, because it was able to break the trend of the market. So this one becomes the supply zone. So if the market should eventually come into this zone in the future, right, this is now a good place to sell, because why? We have seen that the market has changed trend. What do you mean by change trend? The market changed trend when it broke below the last higher low. So this is for a shift of trend, while this for a trend continuation, right? So this one, there was no shift of trend, but for this scenario, there was a shift of trend, because the market broke the last higher low, right? So this is our last higher low. Let me use the call out tool. This is our call out here. Sorry, cancel. Undo that. I like to undo that. Right, where's my call out button? Call out, call out, call out. Yeah, that's it. So this was our last higher low that made it a shift of trend. If you have not understood market structure, please go and watch my last video, my videos on market structure. I can't start explaining that all over again. So now we saw this was our last higher low, right? And then there was a big break of structure or a shift of trend, because the market now becomes bearish. So you can simply target the supply zone that broke structure. This is a very simple way to trade. Supply zone that broke structure, you take your sell there. Your stop loss should be above the last week, and then where are you targeting? They're targeting this low here. You over that target this last low, right? So this is a very simple way to trade. I've shown you, I've defined supply and demand zones. I've shown you how this thing is traded. I would like to just use real charts to just give one or two illustrations. I don't want this video to be so long, so let's just go to real charts to see if we can find this, right? Let's check currency pairs. Let's check currency pairs. Let's go to Euro JPY. Let's see if you can see an example of this. Let's go to the 2-hour time frame. See if we can see just one or two examples that we'll wrap it up for the day. Right. So this has been a very bearish market, right? This has been a very bearish market. Okay. Now let's look at what happened. The market has been bearish. I'm trying to see if I can see. Okay, I can see this. Now, if we zoom into this zone carefully, we zoom here carefully. If we can zoom, this was a low, right? And then look what happened. The market came into this zone, right? Look at this. This was the last sell area, and then look what happened. We had a break of structure. Look at this. There was a break of structure here. The market broke this last low. Remember, it was a bearish market. The market has been trending downwards. So we saw this last break. We saw this break of structure because the market closed below this lower low. And then look what happened. The market came into that supply zone again. Look at this. It tapped that supply zone again. Look at what happened. It sold massively all the way down. So this is how to trade it. Look out for that supply zone that broke straight to the upside or the down, or the demand that broke to the upside, right? And you can simply take your trade there in line with other confluences, right? I'm going to see if I can see something like that again. There was no break of structure here. Was there? No, there wasn't. Right. This is Euro GPY. Okay. Okay. Let me see. I don't think I can find any example on this for now. Right. I can't really find an example on this because these things don't happen very frequently. You find it very frequently in smaller time frames. Sometimes it takes a lot of time for this to happen. Right. So let me check if I can find it on a synthetic indices. Yeah, I saw this on V75 recently. Yeah, I saw the Black 75 on, I think, the 15 minutes or the 1 hour time frame. I saw that play out perfectly, right? So let's go to the present time. So look at what happened there. Look at this. Let me go to the 30 minutes time frame to show you guys what happened there, right? I want to show you guys this thing so you guys can catch the flow. All right, look at this. Right, look at this. If you look at this market closely, look at what happened there. We saw the market giving some kind of lower high. So there was some kind of structure at this point here. Look at this. There's some kind of structure at this point here, somewhere around there. And then look what happened. The market tapped here. I took this by the time I'm explaining it for you. The market tapped here, and then the market closed above. You're using, for you to check a BOS, so using the closed prices. So even if we use our line charts to check this out, let's use our line chart to see if there was a break of structure. Look at this. So if you're using a line chart, this was the average close price. And then look at the market closed clearly above it. So this was a clear break of structure on the 30 minutes time frame to the upside. And then let's go back to our candles. You can use line chart to check a break of structure. Look at what happened. The market came into that demand zone that broke through to the upside. Look at what happened. It tapped here. I took this back and it bought massively, right? It bought massively to here. I think there was some kind of supply zone. This point, this was some kind of supply zone because we saw a lot of sell pressure at that point. So there was some kind of supply zone around there. The market bought all the way from here into the supply zone and then rallied down. Because this supply zone was, you can see that it pushed market down for a while. You can use the last bullish candle. You know, supply zones, other blocks, those things, they actually look alike. They are actually related together. So you saw there was a break to the upside. You see the market tap into that supply zone, and then you can see this, right? I don't want to go into smart money concept because you can also add demand and supply with smart money concept, right? I don't want to go into smart money concept because of the length of this video, and I can't really share everything on the free YouTube channel. So my mentorship program is still ongoing, right? My students are doing very well. I think I will share the results maybe sometime this week. One of them turned $9 into $50+ right from what I teach them. That is, she did about 400% in a single day, right? My students are doing very well. And if you want to be part of us, we don't only teach you, we call trades for you, we give you analysis to help you to earn while you gain mastery. So if you want to join my mentorship program, it goes for only $50 dollars, which is 25,000 in Nigerian naira, right? You can pay with bank accounts, you can pay with cryptocurrency, as long as up to $25, I mean $50, which is 25,000 naira. You can pay in 2 installments if you wish, right? That is, you're paying 12.5 and 12.5 to come. I mean 12.5, yeah, and 12.5, yeah. So don't forget to join the Telegram channel, like this video, subscribe, and this is my happy birthday gift to you. Please, I want to also mention one thing in your trading journey. Please don't be in a hurry to make money. Be in a hurry to gain mastery, right? Don't be in a hurry to make money. Be in a hurry to get money. That means your sleepless night should be to gain mastery. Once you get mastery, this thing becomes very easy, right? And what this also will offer you in our mentorship program, we help you to attain mastery, to analyze this market, to take trades by yourself. All trades I call for myself are things I analyze myself. I don't go to check signals. I do this analysis myself based on knowledge. And my students do the same thing. They make money. So do well to join my mentorship program today. If you wish, just hit the link in the description. I'll be posting that, and that will be all for now. I hope this video helped you. If you have any questions, do well to ask in the comment section, and that will be all for now. Cheers and have a wonderful day.